Okay. What's going on, everybody? It's your boy Brandon, the Brand Lee, owner of Brandon Lee Financial, where we do everything from help you get into your dream home. We help you get your business funded. We can help coach you on your business. We can help you become a real estate investor. And it all starts with credit, so that's one of the main things that I like to stress and, build up on my clients and my students, so much so that, if you didn't know any better, you would just think I was the credit guy. But really, no, I'm the financial guy. I just know credit is such a powerful tool that we can leverage to become, 100,000aires, millionaires, and even billionaires. The sky is the limit when it comes to building yourself up when you have great credit. I mean, literally, if you guys would invest as much effort and time and energy into building your credit as you guys have trying to, learn different business tactics or network to promote your business, you would be surprised how fast and how far you could go without so much having to put in so much sweat equity if you would just take, 3 to 6 months and either build up your credit on your own or, pay a professional company like myself or someone else's to help you build your credit. You could go so much further, so much faster. So there's so much talk about credit out here, just in the world, in the media. It seems like everybody on social media is a credit expert or a credit guru, and that's fine and dandy. I'm not here to knock anybody. What I'm here to do is really give you the real, no fluff, no BS on, building your credit, repairing your credit, and also using your credit. Because so many people will try to teach you how to, clean your credit, but they won't teach you how to build your credit. And then some people will teach you how to build your credit, but they won't teach you how to use your credit as far as getting funding, And some people will even teach you how to get funded, right? But they won't teach you what to do with the money after. So I'm here to be your solution, or, maybe one of your people that you listen to that can give you some good ideas, some good tips, and some tricks on not only how to repair your credit, build your credit, leverage your credit as far as getting funding, and then what to do with the credit after. Because I talked to an older gentleman one time, and he ended up becoming one of my mentors, and he told me, he said, Brandon, credit is a tool. It's like a chainsaw. You could use it for good, and it could help you build a house, or you could use it wrong and you can chop your leg off. You know what I'm saying? So it's like a double-edged sword. It can be used to just change your life like it did mine. Thousands of my clients and students, people that follow me and have worked with me over the years, it could just change your whole life, or it could put you in more debt and you could have more headache, more problems, more issues before you had any credit and any money, right? So what I want to do, I want to break down, again, everybody talks about building credit. Everybody talks about cleaning and repairing credit. But what I want to do is break down the makeup of the credit report, the breakdown and the makeup of the credit profile, right? Because honestly, I could look at a credit profile. I could talk to a client, get a copy of their credit report. In a minute or two, I already know what's wrong with the credit. I can diagnose it so fast. Especially if they give me something like Credit Karma, even though I don't use Credit Karma, honestly, but the way that the credit factors are set up on that website is a lot like the FICO factors. So I can look at it so quick and know if the client is in good shape, bad shape, what we have to do to get them in good shape very quick. My little trick that I learned from one of my buddies that kind of introduced me to the credit game. One of my guys in Buffalo named Pharaoh Page, taught me a lot of stuff about credit when I was just using cash. And a backstory on Pharaoh is, I made millions of dollars in another industry, which was financial as well, before I even added the credit piece to my business. And I noticed, Pharaoh was a little younger than me, like a little brother to me in a sense, but he had his own financial business as well. And he used to always stress credit, At the time, I was such a person and, just kind of in my bag because I was making so much money. I act like I didn't care about credit. But really, I was just ignorant and I didn't take the time to understand or learn about credit. Because my mom still has excellent credit. But everything I would buy, Pharaoh would be able to buy the same thing. If I go buy a car, he would buy a car. I would go on a trip, he would go on a trip. He may take his whole family, like 20 people on the trip. I would be flipping properties. He would be flipping properties. But the whole time this guy was using credit. And, he taught me, he was one of my first teachers, introduced me to the credit industry. And then I went on to get with some of the other top coaches in the industry that actually are, coaches and mentors. But, starting off with Pharaoh, he gave me one of these tips that, it made so much sense to me. He said, B, when you pull up your credit report, Credit Karma, if everything is green, you're pretty much ready for funding. If it's yellow here, then okay, you still could go for funding. But if it's yellow here, no. And if it's red, no. And that made so much sense to me. And I don't know how deep his actual understanding of the numbers and the psychology behind everything was, but he had a simple trick that would let him know or give him his roadmap to dealing with his clients. Now me, everybody that knows me knows math is my thing. I'm a math major, got an MBA in finance. I've been in all types of businesses that, math was the main component of it, from accounting to loans. So I had to do a deeper dive, because even when I start studying what made up the credit report, nobody showed the actual numbers. They would always show the percentage. And that's fine and dandy. That's great. But I said, I want to take this a little deeper, because my teaching style, I adopted from another one of my mentors that told me, Brandon, everything you do, teach it on a third grade level. I took it to another step, took it to another level, and I decided to teach it on maybe a first or second grade level. And that doesn't mean that we're slow, but I want to be able to teach financial literacy credit to kids in the first grade. So I said, okay, let me break this all the way down to where my little cousin, who's probably 5 or 6 years old at the time, to where he can understand it and he can go home and tell his mom, today I learned about credit. And so I'm going to break this down for you in this same simple format. And I think when we're done, you're going to really have a deeper understanding, a deeper knowledge, what it takes, to really build up your credit profile. So after doing some research, I found out that the lowest a credit report or a credit score could be is 300. Now we all know the highest is 850. So in between that 300 and 850, there's 550 points in the middle. And so what I decided to do was literally break down every section and the 5 FICO factors and give you guys the exact number. So that way, when you're looking at your credit card utilization and it's 30, you can do the math and figure out, okay, if I pay my utilization off, my score is going to jump up this many points, or if I take off these inquiries, my credit score is going to jump up to this many points, right? So the first thing that I look at when I look at a credit report, and again, I did this on Credit Karma forever before I switched to Identity IQ. I love Credit Karma for the simplicity of it, but Identity IQ is just so much more accurate. And so, yes, I got to do a little bit more digging to get all the information, but I'm going to get the right information from all the bureaus across the board. But let's pretend I'm in Credit Karma. So the first thing I'm looking at when I pull up a file, or I'm with a client and I'm opening up their credit report, is I'm looking at their payment history, because that's everything. You know what I'm saying? Like, a lot of people think it's so much about the score, how much available credit they have. They're quick to go add $20,000, $30,000, $40,000 trade lines, and they think that's just everything, right? And it's good, it's great. I'm not here to rain on your parade, But what's very important is your payment history, because you could have a bunch of stuff open right now. You have a new credit file that's a 750, and that's great. There's certain lenders that's going to give you an opportunity, but then there's certain lenders that's going to go and see what your payment history is. You know, what have you paid off? Look inside of the things that you did pay off and see how many lates was there. And so this right here can really determine your patterns. You know, this determines who you are, what type of payer you are. You know, are you late every month? Are you late every third month? You know, and these are the things that when I'm talking to a client, I'm trying to figure out, why are you late every month? You know, you're paying it, but you're paying it late every month. Is it just a lazy thing? It can be fixed with something as simple as putting your payment on auto payment, or, you know, the first of the month, sitting down and paying your bills. That's another subject for another time. But the first thing we want to look at is the payment history. And so if the payment history is anything other than 100, we got problems. You know, as soon as I see that the payment history is not 100, I'm clicking on what's there. Is it a credit card? Okay, cool. If it's a credit card, you know, in my opinion, I want to close that credit card. I want to pay that credit card off and close it and dispute it off the credit profile. Because in my opinion, it's no good. It just ruined the credit report, in my humble opinion. Now, if it's 2 or 3 years old, the lates, that weighs in not so heavy. But if it's a recent late on your credit report and it's a credit card or a car or whatever, like, I want that off the profile, because at least if it was 2 years ago and you had one late payment or two and then you made up for that with tons of on-time payments, that's great. But if you didn't and this was a brand new late, like, we're not about to get funded. You know, you may get a couple credit cards here and there, but you're not about to get $100,000 in funding to start up your business. You know, you may have problems getting a house now. So we need to get that going, all right? That's the first thing I'm thinking. But that alone, the payment history alone on your credit report weighs in 30%. Now, let's break it down deeper into numbers. 192.50. So basically, if I round it up, that's like 193 points. Now, granted, that's out of 550 possible points, because the lowest we can go is 300 and the highest we can go is 850. So payment history is crazy. That's like everything on a credit report, you know, the payment history. So you guys want to make sure that you are paying your bills on time. You know, if a bill is due and I know I got to pay it, I'm limited on funds. I was supposed to go on a vacation because one of my friends asked me to go. I'm not going on a vacation. I'm going to pay that bill, because that bill, having that on-time payment, is going to enable me in the future to go on a lot of vacations, because I'm using my credit as my number one leverage tool to get money to start, grow, or buy a business. So that's the first thing, 192.50 for paying your bills on time on your payment history. So the second thing is amount owed or credit utilization. So if you're on like Credit Karma, it's your credit card utilization or your credit card usage. That counts for like 165 point. Crazy, right? That's 30% of your overall credit score for the amounts owed or credit utilization. So just to make it simple, you know, basic math, when I look at a client and I see that they are, let's just say 50% utilized on their credit card. So let's say they have $1,000 credit card and they're using $500 of it. For the most part, if they would just pay that credit card off to zero, then their credit score is going to jump up like 80 points. That's a ton of points. You know what I'm saying? So, you know, for every 10% utilization that we're using, is basically 16 points, you know, just to round it off, you know, and make it very, very simple. Now, sometimes it's a little bit off, but this gives you a really great gauge. If you're 100% maxed out on your credit cards, and a lot of times these credit cards will be like a couple $100s, let's just say $100 credit card, and you're maxed out on it, $100 secure credit card, you're maxed out on it, and you're losing 165 points. That's crazy. Or if I'm looking at a credit report and they have no credit cards, then I already know if we a secure credit card, boom, we're up like 165 points. Take it up another notch. Let's say we added an authorized user credit card, zero utilization, $20,000, $30,000 on it. That looks great. But on top of that, it has excellent payment history for 5 years. Now, you actually can take a brand new file and it can hit the amounts owed and it'd be zero. So you got like 165 points there. And then you get the great payment history. So you get like 192 points there. You see how fast you're racking up an amazing credit score just by having, revolving history, especially authorized user accounts with age on it, or just by adding a simple credit card, and you're not maxed out, is gonna bump you over 160 points. So on top of using an authorized user account or just letting your primary account, which is yours, mature and get some age on it, 6 months, 1 year, that's still making your payment history amazing. So with or without the help of the authorized user account, we're still going to have an excellent credit score by adding revolving, which is credit cards, lines of credit, and paying those bills on time to boost up that age, or adding an authorized user. And also, paying loans and things of that goes into your age as well. But, I'm just giving fast, unique tips on boosting it. So the next thing is going to be how long you have had your credit, which is the age of the file. And so I was kind of touching on that a minute ago because it goes hand in hand with payment history. So you may have had a credit card for 10 years and now you have 10 years of history. Now you may not have on time history. So, payment history and the age could differ a little bit because you could have great age, but then you could have bad payment history. But let's just say you have great age and payment history, you are golden. You're golden because the age of the file or the age of that account or whatever, that's 82.50, basically 83 points. So again, is that starting to register in your mind how you can have zero credit and you can add an authorized user credit card, right? And it automatically hits the payment history, it hits the age, you know what I'm saying? And it hits the utilization. So now you got 192.5, you got 165, and you got 82.5. All off of adding one credit card. That's crazy, right? So I want you to really think about this. Again, whether you're adding authorized user accounts or whether you're just building up from your secure credit cards. Because I talked about this in another video that you can check out where I talked about boosting your credit score up to 550 points in as little as 30 days. This was the sauce. This was the secret. This was the magic. Adding the right accounts to your profile that will basically, and I didn't go deep into that on that video because I was just trying to show you overview of what to do, but you're hitting so many of the factors because just by adding a secure card, getting approved for unsecured card, and or adding an authorized user account, you already hitting 3 of the 5 FICO factors that weigh the most. One of them is almost 200. One of them is almost 170. And another one is almost 100. That's a lot of points, guys. So make sure that you're thinking about this before you decide to miss a payment, before you decide to max out your credit card. So, just a rule of thumb, if you keep your credit cards, the utilization down low as possible, and you pay the bills on time, you're golden. You can now go get the car, the house, the credit cards, the business loans, the personal loans, whatever you want. You can become the bank. You can go get money and reloan it if you like. That's a gem in itself. You know what I'm saying? So having credit, man, is like is up there, health. You know what I'm saying? It's your financial health, because I can look at this and I can almost tell your financial health. You may have some money in the bank, but if your credit isn't right, to the bank, you're unstable. And I don't care what they say about, oh, I got cash. That's cool. That's fine. That's great. But like I tell my clients that have millions of dollars, you're going to run out of cash before I run out of credit. Because even if I maxed out what I could possibly do on my credit, I can go use somebody else's credit and somebody else's credit and somebody else's credit. If you run out of cash and, your business is having slow months or whatever the situation is, it's not that simple to go ask somebody to give you some cash and you don't have credit. It's much easier to ask somebody or a bank for some cash if you have the credit than it is to ask for cash if you have just cash. Now, granted, there is some loans that we can get off of our cash flow, but if your cash flow is not flowing right, then you won't even get that money. And that's a different topic for a later video that I'm sure is on the way, because that's one of the things that we do at Brandon Lee Financial is all types of business funding, from startup to existing to assets to real estate, but at the end of the day, my point really is credit is everything. They say cash is king. I beg to differ. I believe, like one of my big brothers, Will Roundtree, credit is king. Now, this could be controversial. You can weigh in, you can say whatever you like, but this is my opinion, because if I was broke and I had zero money to my name and you offered to give me $20,000 or 800 credit score, I'm taking the 800 credit score, because I know what I can do with the 800 credit score. Now, granted, if I was broke with zero to my name and no credit and you give me 20,000, I'm going to go build my credit so I can go get some more money, right? So that's my personal opinion. You can take that how you take it. I'm not changing mine. Okay, so the next thing that I want to talk about on the 5 FICO factors is the credit mix, or the type of credit. Because a lot of times we will have clients come to me all the time, great credit, they got the credit card, they may have 2 or 3 credit cards, they may have an authorized user account, and their credit is clean, right? There's no negatives, there's no recent inquiries, there's no collections, there's no charge-offs, no bankruptcies, no repos, no foreclosure, but they just cannot seem to tip the 800 mark. They may be at 740, 750, 760, but they can't get to the 800. And a lot of times when they tell me this, I already know the answer. But when I look at it and I see that the file is clean, the utilization is low, then I already know the answer anyway. It's because you still don't have a well-rounded credit profile. Your credit mix is not strong. And so one of the things that, my big brother Will taught me was, from the start of a file, even if it was a 18-year-old kid's file, I want to build that file up in a way where it hits every marker in a positive way, right? So not only would we do the secure credit cards and authorized user account and of course clean up the file, but we got to take it another step deeper, and we got to installment credit, because the way to really get 800 credit score or better, you're going to understand this when I say, if you ever notice that older people tend to have the better credit score, and that's because they have a more well-rounded credit profile and their credit mix is going to be stronger. And so they're going to have a credit card, car loan, and a home loan. And a lot of times they have sold a home. So, that went into their payment history, selling this house, basically completing that loan. They could have bought $1 million house and lived in it for 1 year, paid it off. Now they got $1 million line of credit that was paid off. Well, $1 million installment loan that was paid off on their credit report. That weighs heavy. That's heavy credit mix. Or if they home loan open right now and they don't have any late payments and they're paying on time, that's heavy on the credit mix. If they have a car, 30, 40, 50, 60, $100,000 car, and they're paying on time, that weighs heavy on the credit mix. So basically, credit mix is, having a variety of different types of credit, not just revolving or not just installment, So you want to make sure that you have the secure loan by self or credit strong that I mentioned, on another video. And the link will be in the description, how to add these loans, how to add, you may not own a home, right? You may just be renting, which is cool. A lot of millennials are renting, they like to travel and move and live life on how they want to live it, and that's fine. But you can still get credit for paying your rent, similar to how you would get if you're paying your mortgage. So that weighs heavy on the credit mix. So to really get the credit mix, you want to make sure that you have secure credit card, unsecured credit card. When you get to that point where your file is built up and you have a major brand, Amex, Wells Fargo, whatever credit card, maybe you have authorized user accounts with some great age and payment history. But then on top of that, now you have an installment loan, whether it's a personal loan that was unsecured, or if you started your own loan with Self or one of the other secure loan companies. And if you're reporting your rent, this weighs pretty heavy on a file when you're thinking about going to that next level of getting 800 plus. It only shows 10%, which is 55 points. But those 55 points, a lot of us are into the vanity. And so we want an 850 credit score or 800 credit score. We want to be in that 800 club. We want to feel good about ourselves. And I'm not going to lie. When you walk in the door at certain institutions with an 800 credit score, the conversation is different. You sit down at the table different, and you're not taking none of that mess. Listen, we got 800 credit score. We're not taking no junk. We're negotiating with the bank. We offering them the deal. They're not offering us the deal. We offering them the deal. So I get it. We definitely want those vanity. So the type of credit, aka the credit mix, will get you 55 points on your credit report. So make sure that you don't just go top heavy with just credit cards. You want to make sure that you have installment accounts such as car loans, personal loans, home loans, secured loans, any kind of loans. You want to make sure that they're on, even student loans, if you're paying them on time. That weighs heavy on the credit mix. And so last but not least is going to be your new credit. And this counts for 10%, 55 points. And new credit is going to be AKA inquiries. Now, sometimes you might hear me call it inquiries. Sometimes you might hear me say inquiries. I'm from down south, and I grew up in New Orleans, Mississippi, and then I lived in Atlanta and Michigan. So, sometimes my speech in English can be just all over the place. One minute I can sound like the countryest boy from the country, and then at some point I can sound like somebody from the East Coast of New York or the Midwest in Detroit. So I accept both pronunciations of the word. I hear inquiries, I hear inquiries. They're both right? So don't start talking stuff when you hear me say inquiry on this video, and then we get on the phone with a consultation and I'm saying inquiry. Okay? Don't kill me. Don't talk bad about me, because at the end of the day, I'm trying to get you to the next level. Okay? But yeah, so inquiries, they count for up to 55 points. So a lot of times I'll see a file and it'll have 30 or 40 inquiries. And so I already know if I can get those off, I can boost the credit score up to 55 points. So when a client comes to me, let me show you how the conversation works. I'm looking at their file. They have no credit cards. Okay, cool. I know I can get them 160 points if I tell them to add this or this. And this will be the secure credit card and or an authorized user account. Okay. And then I'll see they got a ton of inquiries. So I know, okay, boom, we're going to get 55 points when we clean that off. They have no credit mix. So I know we're going to get like 55 points when we help them get the mix. And I know we're going to get 192 points after they pay their bills on time a couple times. So when a client comes to me with no credit, that's everything. That's beautiful. I love that because I can build that credit profile up so quickly. But even if they come to me with credit, with established credit, and they're just overutilized, I know how to fix it. Either we pay it down or we add authorized user accounts with a high limit so we can boost the overall utilization down. Now that does not work with every bank. Some banks don't care. Like, they're looking at each individual account and wondering why it's maxed out or why it's past, whatever threshold they have set in their lending requirements. But when we're just talking about pure vanity of a credit score, I'm looking at it and I'm like, okay, cool. We can pay the credit card down, but if it's cheaper to add an authorized user, we can do that. And if they need just a quick boost to, get into a home or something like that, and they don't have any installment accounts, but I know they've been paying rent on time for 5 years, I'm like, Okay, so now I know that this can help boost their credit mix, their age, and their payment history all at once. So being in such a unique position, because I'm helping clients get into homes because my background is real estate. I'm helping clients fund it because I run a finance company that does funding. I'm helping a client good credit because that's what they want, so they can see it and feel good about it, or just helping them get into a car because they need a new car and they don't want to pay a crazy interest rate. No matter what the reason for wanting to fix your credit, improve your credit, build your credit, maintain your credit, it's one of the best decisions that you will ever make. And the worst time to think about fixing your credit or building your credit is when we need it the most. When your car breaks and you gotta go get another car, and they pull your credit and it's $450. But if you were working on it the whole time or maintaining it, we wouldn't have this problem. Or you get this big opportunity for your business to make a lot of money, but you need money to float the business. You need money to buy the inventory to sell it to whatever company you're selling the inventory to. You got this big contract. But if you had credit, you can go get a line of credit to do this deal. Or you could go get, a personal loan to do this deal. But the fact that you don't have credit, now we got to go borrow money at a crazy high interest rate, either from a loan shark, or we try to go borrow it from an investor who's going to want to be paid dearly or even be partner. Which I don't blame him. He's putting up his money, his or her money, because he was responsible and you were not. When at the end of the day, all you had to do was work on your credit little by little and make decisions for tomorrow and not so much of today. So, listen, I hope I really broke this down to you where you really understand it, you can grasp it, but most importantly, you can use it, because it's one thing, again, to know, but it's another thing to actually apply. So just having knowledge is, I know some of the smartest people in the world that just have knowledge, right? But to me, if they're not applying the knowledge, then they're still not wise. They're just smart. They can be smart and kind of foolish or ignorant in a sense, because they have all this information and knowledge, but they're not applying the knowledge. So what makes you really go to the next level and become a winner or a star or, very successful is the fact that you apply the knowledge. And me, I'm one of those type, when I get knowledge, when I get information and I do my research and make sure it's legit, I can't wait to use it. And I think that's what, over the years has set me apart from some of my peers. Even since my teenage years, I was never afraid to try and invest. And, I hear some guys in the bathroom talking about a stock tip. And these guys, you can't judge a book by its cover, but they're talking about this in such a way where I feel like, I feel like they know what they're talking about. They know more about this than me. And I go run to we didn't have Ameritrade or whatever back in the day where we could just log in, or I didn't know anything about it, but go run to the stockbroker and say, hey, I want to play this much money on this. And boom, I made money. Now I could have lost money too, but again, it's about taking that chance. And that's not even an example of a very calculated risk, but that was, a good tip. But I'm telling you, people are showing you looking at the proof of, if I invest my money and my time and energy into my credit, I can go from having no money to owning a building, owning an apartment building, owning a house, owning a car, buying a business. Not just starting a business, buying a business with an SBA loan, because, I was able to get approved by my credit, go pull the money out from a credit card or a personal loan and buy something based off of the income that it's producing. And now I own it, all because of credit. So credit is powerful, guys. And remember that analogy I gave you earlier. It's one of the most powerful tools ever, but it's like a chainsaw. You can use it to build a house or help build a house, or you can cut off your leg and your arms. Okay, so we don't want to cut off our legs, our arms, our hands, our toes, our fingers. We want to build a solid foundation. We want to make money. We want to get that generational wealth that everybody talks about. And we want to just leave a legacy and be very, very successful. And in my opinion, it starts with the credit. So listen to this video over and over again until You really get the understanding of it. Apply these things. The links to the accounts such as Self, different credit builder cards, and credit monitoring will all be in the description, as well as a link to book a consultation with me, and we can talk about your credit profile, build you a custom game plan, help you clean your credit, coach you to starting a business, growing a business, buying a home. Listen, Brandon Lee Financial is like A to Z in finance. So we're here to help. I gave you enough game to do it yourself, but I'm here to help if you don't want to do it yourself or you want to go to another level and get some more information. All right. So it's been real. I love helping you guys go to the next level. Give me a like, subscribe, comment, and I'll keep making these videos. All right, y'all. I'm out. Peace, and I love y'all. Talk to y'all soon.